Day in crypto. I want to discuss Maker with you. Maker is one of the oldest and the most important DeFi protocols. And while all of the newcomers to the DeFi space, they've been getting a lot of attention, Maker is a powerful player and continues to innovate and to lead the pack in terms of adoption and of its technology. And I also want to talk about why I think Maker is primed to make big gains over the coming years. The cryptolark. This is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. Also, if you are keen to try your hand at trading cryptocurrency, but you're really not sure how to get started, then check out my course, Crypto Trading Explained. It is going to walk you through all of the basics that you need to know as a beginner to get started trading. Everything from understanding what a chart is, to identifying trends, to spotting breakouts, learning key indicators to use, managing your risk, and much, much more. There's a link down below in the description where you can learn more. Okay, now, before we begin, of course, a quick disclaimer. No one paid me to do this video. It is just free information for you to enjoy. So enjoy it. And if you appreciate this kind of content, then please, watcha! Smash up that like button, leave a comment down below to show your support, and of course, share this video around if you did think it was useful. I currently own no Maker tokens, although I could reconsider that position in the future. And please do understand, investing is risky in that you, yes, you listening, you will lose all of your money investing in cryptocurrency. Not the other people listening. They're all going to get wildly rich by investing in Maker and other cryptocurrencies. Just you. You're going to lose all your money. Any investment should be made with that understanding in mind. So, with all that out of the way, what the heck is Maker anyway? Well, when we speak about Maker, what we're really usually talking about is MakerDAO, which is a decentralized organization built on top of Ethereum, which enables the lending and borrowing of cryptocurrencies and other assets, all of that being done without the need for a middleman like a bank. If you have the collateral, then a loan can be taken in a matter of minutes. No KYC, no BS, just cash in a flash. Well, not exactly cash, DAI stablecoins, but you get the idea. And all of that stuff like credit checks, it's not even a thing because you avoid all that by having over-collateralized loans, ensuring that even if you don't pay back the loan, that the system can simply liquidate your position and pay the loan back, which obviously that's not what you want to happen. You're doing this because you're wanting to get cash for your crypto without having to sell your crypto, or a lot of other potential use cases as well. Now, the risk of liquidations obviously is something that's been problematic. This does introduce an element of risk in using a platform like this, but it also adds balance to the network overall. So that's the basic premises of Maker. I'm not going to be showing you how to use Maker in this video. I've done a tutorial like last year sometime. I've actually done a tutorial more recently on my wrapped Bitcoin video where I show you how to borrow the DAI stablecoin using wrapped Bitcoin on Maker's Oasis app. So if you want to check that out, go watch my wrapped Bitcoin video. But I want to talk now about the token. Maker has a two-token model. There is the Maker token, MKR is the ticker for that. That's the one you would want to invest in. This is the governance token for the platform. It is a deflationary token. So fees are paid for the loans and all that stuff in Maker. And also liquidation penalties, those are also priced in Maker. So fees, when they are paid, are used to buy Maker and burn Maker. Token holders also get to vote on things like new assets that can be listed for collateral within the platform. And then the second token is DAI. That is the stablecoin that you get in exchange for putting up your collateral. Right now, over 400 apps and services have integrated DAI, which is incredible. The DAI token is itself really a revolutionary form of money because it is a dollar-denominated digital money issued by a decentralized authority backed by decentralized assets. It's incredibly exciting when you understand the potential of what that is. And while Maker started by only accepting Ethereum for collateral, this has actually expanded greatly in the last year. You can now use Basic Attention Token, 0x tokens, Kyber tokens, wrapped Bitcoin, and quite interestingly, USDC and TUSD. Anyway, the real big and crazy innovation that happened recently is that Maker will begin accepting real world assets as collateral for loans. This is massive, massive, massive. Now, two very interesting use cases are being pursued for the first iterations of this technology. They're looking at supply chain invoices and musicians' future royalty streams. These assets will be tokenized and then can be used as collateral to get DAI stablecoins. Now, this is really, really big in terms of opening up liquidity for businesses because the time between when an invoice is issued and when it actually gets paid, that can be very, very significant at times. In a business like a freight forwarding company, for example, they really need constant cash flow to pay workers and pay fuel fees and all this kind of stuff. Now, this technology right now, it's just at a pilot stage with these particular types of collateral, but according to the founder of Maker, these two asset types, they are just the first step. Thousands and thousands of assets will exist alongside them. It's a very bold claim. Meaning that if successful, Maker could become one of the biggest lenders in the world, and it's all going to happen in a completely decentralized fashion. Legacy finance, man, they are so screwed. It's not even funny. Why go begging at a bank? Please, sir, give me some money. When you can just tokenize your invoice, get DAI stablecoins, all of it's done in under 5 minutes in your pajamas. It's crazy, man. Now, another big boost for Maker is that they are a key part of the baseline protocol, which is covered here a few times on the show. It's an Ethereum Enterprise Initiative. This is a major push by some really big players who back the Ethereum Enterprise Alliance, such as Ernst & Young and Microsoft and AMD, to onboard some of the world's biggest corporations and businesses onto the public Ethereum mainnet. So Maker integrating invoices and royalties, you can see that as being a key part of this association. And its close relationship with some of the world's biggest companies can, of course, also help achieve great success in the long run. And while Maker is perhaps one of the most interesting and fundamental pieces of the cryptocurrency economy, and in particular of the DeFi landscape, there are, of course, some things that you need to keep in mind as a potential investor. The competition, it is fierce and it is growing. For example, we have Kava, which is offering a similar system to what Maker has, but it's actually spreading the idea of decentralized loans to many chains beyond Ethereum, aiming to corner the markets on Binance Chain, on Bitcoin, on the XRP Ledger, and on Cosmos. Also to keep in mind is that DAI stablecoin rates, they can vary wildly sometimes as rates adjust very quickly within the market. So if fees go high enough, that can actually serve as a deterrent to using Maker if those DAI fees do go high enough. Another thing to keep in mind is that back on March 12th, when the price of Ethereum dropped from $191 down to like $88 in a matter of just a couple hours, the so-called Black Thursday event, soaring gas prices meant that liquidations were unable to be formed properly on the Maker platform. Many people lost incredible amounts of money when this happened, and the team even contemplated an emergency shutdown of the platform. Now, an auction for newly minted Maker coins was actually held later on to fix the multi-million-dollar wound that was left by Black Thursday. Now, this was Maker's probably biggest test ever, and while it got beat up and it got bloodied, it did live to fight another day. It was a pretty extreme event, and it did survive that. Now, interestingly, the MakerDAO Foundation is also planning for its own obsolescence, which I think is pretty gosh darn cool, handing over the keys to the network to the token holders in a couple of years. Now, in terms of decentralization, this is going to be a massive step in the right direction. Okay, now what about a price prediction for Maker? Well, to recap, I think this is one of the most important DeFi protocols with what is in theory a deflationary token model primed to accept potentially thousands of real world assets and could be positioned to be a key decentralized protocol for the entire crypto economy and even for real world enterprises in the coming years. Now, with this hype, and of course the game theory incentive for token holders to hodl their Maker tokens as long as possible because of the deflationary model, a $5,000 Maker coin would not surprise me at all in the coming bull run. Now, that's a lot of value to come into Maker, but Maker is currently around $500 a coin, $475, something like that, time of recording this video, with a $400 million market cap. So Maker getting up to a $4 billion market cap, considering the hype around it, would really not be a surprise to me at all. It hit a $1 billion market cap during the last bull run, and it had only just debuted on the market. It wasn't even really doing anything yet at that time. It is a far, far more mature protocol now. So that's my thought anyway. Those are, of course, just my 2 Satoshis. I'm always keen to hear your opinion on Maker. What do you think? Do you think it has what it takes to become a major player in the DeFi space, the crypto economy, and beyond? Is a $5,000 Maker a realistic estimate? Or have I just been hitting that hopium bong way, way too hard again? Or is your money, like me, on one of the competitors, like Kava, since you see a better gains potential because of the lower market cap? Let me know down below. Long live the blockchain, and peace out till next time.